Today we resumed the treacherous trade of last week that led us to a very, very red market for the entire week. And it came back today. So what does this mean? We're seeing bond yields tick up and we're seeing the market be negatively correlated to that and sell off. I want to advise you to think long term in this environment because a trade is currently happening that I think is ill-advised, as Jim Cramer would say. Bond yields are ticking up for one reason that I believe is inflation. Inflation occurs, having cash back at a fixed amount is not that attractive of an investment if the value of that cash is going down. So people demand a higher interest rate in order to buy a bond. They want to be compensated for their inflation risk. Now, if you ask me, inflation is a good thing for stocks. When you have inflation, you see an increase in prices. This means companies will be selling their products at an increased price. Now, there is a case that rising bond yields could make stocks less attractive. If you can get paid more money from a bond, well, you should be less inclined to buy a stock. Bonds become more competitive in the ROI market. But there's a difference between ROI and real ROI. In bond terms, real interest rates and nominal interest rates. What we're seeing right now is an increase in nominal interest rates, the actual number of the interest rate. But when you consider inflation and the devaluation of that dollar you're getting back, you get what's called a real interest rate. And this is really what matters, is the real interest rate. So if inflation is occurring and nominal interest rates are rising at the same pace of inflation, there is no change in the real interest rate. Stocks will adjust to the real economy and the real output of the products they're making and also the nominal. But if there's inflation, all the nominal goes up. Inflation is essentially a lift all boats scenario, if you ask me. And for that reason, I don't think you should sell stocks. But we have to be cognizant of the trade that's currently happening and people seemingly dumping a lot of stuff, particularly the tech stuff. And I simply disagree with it. And I hope to not be wrong. I hope that one day people aren't looking at this video and be like, he laughed. He thought inflation meant stocks went up. Well, that's the thing. If people are saying stocks are the value of the future cash flows, yes, inflation will increase the inputs into that cash flow. If you have to buy lumber and the price of lumber goes up, you're going to have to decrease your margins unless you increase the sales price. Wait, are people going to want to buy the same amount of goods? Let's take a look at the market because some areas of the market have been experiencing inflation for quite some time, particularly the housing market. The housing market has been highly inflated for several months now, and not just the price of houses, the sale price of houses. Also, the price of lumber and the price of copper, which is involved in a lot of wiring. Homes have been skyrocketing. This is simply a fact across the country. I believe homes are up 14%. Home prices 14% year on year. Yet we are in one of the hottest real estate markets we've ever seen. Not just the houses have gone up, but the input prices have gone up. So if you ask me, housing prices, an investment asset, have adjusted positively to an inflationary environment. As inflation has hit the housing market, not just in the sale price, but also in the input price, the housing market hasn't collapsed. It's heated up. It's increased in demand. People want to lock in their house. I think the same is going to occur in the stock market in the coming months. I don't know why it's not happening now. I think as inflation fears happen, stocks should see that as well. But maybe it's because we aren't talking about inflation so much. There's no real hardcore price index rise. But I'm convinced that later this year, in the medium to long term, that data will begin to occur and there will be a rush into stocks. And it's a good idea to continue owning stocks and to, I guess, fight the market in this environment. Nobody wants the market to go down. The Fed doesn't want the market to go down, even though they don't really care that much about the stock market. The market, in my opinion, is just experiencing a moment, possibly a couple weeks. This could go on for a couple weeks of, whoa, what is this? Inflation, rising bond yields, all of a sudden increased cost for borrowing. It's not an increased cost for borrowing, if you ask me, because real interest rates haven't changed and interest rates are so freaking low that it does not matter. I think this is a bad move by the market overall. And if I'm right, I will be very right. And if I'm wrong, I'll be very wrong. I'm putting it on the chopping block. I think inflation will increase the price of stocks regardless of what happens to bond yields. And I don't see how inflation can occur. Fundamentally, I do not see how inflation can occur. And inflation, definition, increase in price level. Cannot see how an increase in price level occurs and a decrease in stock prices occur. Prices increase, the money companies get increases, and stock prices will increase with it, just as has happened in the housing market as lumber and copper have gone up and the demand for houses has gone up. There's been inflation in this market, or there's been, all these factors over here. The inputs have gone up. Demand for housing has also somehow gone up at the same time. Rising prices hasn't stopped demand for housing. Inflation in the housing market hasn't stopped demand for housing. I don't see how inflation in the broader economy will stop demand for stocks in the broader economy. So that's the deal for today. We will see what happens. And until next time, peace out.